ELSS mutual fund is the first investment category for many investors that starts their investment journey. In fact, when I started my investment journey, ELSS mutual fund was my first investment. The simple reason is ELSS mutual fund serves dual purpose of investment plus tax saving under Section 80C, where you can reduce your taxable income up to 1.5 lakh. It means you can set up an SIP in ELSS fund up to 12,500 a month to take maximum advantage of tax saving. Now there are multiple investment options to save tax under 80C, including PPF, tax saving FD, NPS, insurance scheme and so on. But ELSS mutual fund category has become one of the most preferred investment option. The biggest reason is superior returns in the long term. Since ELSS mutual fund invests maximum money in the equity market and Indian economy is bound to grow, the returns from ELSS category would continue to beat other options in the category. Of course, ELSS returns would be volatile. It means unlike your PPF that offers fixed return of 7.1%, ELSS returns are not fixed. It means in the short term, returns from ELSS funds can even be negative. However, in the long term, ELSS fund would certainly outperform. Moreover, another benefit of ELSS fund is lower lock-in period. So unlike your PPF that has 15 years of lock-in, ELSS funds have only 3 years of lock-in. So you can withdraw your money in case of need after 3 years. So all these factors make ELSS category very attractive. But the catch is, there are more than 50 ELSS funds in India. How to identify the best ELSS mutual fund? So in this video, I'll help you identify the best mutual funds and share my preferred pick for next 10-20 years. Alright, let's get started. Now if I ask you, what is the most important parameter to shortlist an ELSS mutual fund? The most common answer is past return. Let's be honest. Majority of investors invest in a mutual fund based on past return. So they pick mutual funds that have generated highest return in last 1, 2, 3 years and invest their money. Even the majority of mutual fund agents recommend funds that have generated high returns in the past. A, because it is easy to sell the fund with high returns, and B, because if a fund has underperformed in the past, then even though there is high potential, retail investors would not like to invest their money due to lack of knowledge. Because for retail investors, only parameter that matters is past return. But the problem is, there is no guarantee that if a fund has generated highest return in the past, it would continue to generate highest return in the future. In fact, I recently created a video on 3 best mutual funds for next 10-20 years and discussed the same problem. I would strongly recommend watching that video. Now let me give you an example here. If you visit Money Control website and sort ELSS mutual fund in terms of AUM, you will find that Axis Long-Term Equity Fund is the #1 mutual fund in terms of AUM. The simple reason is that it was the top performing mutual fund in the past. Hence, majority of investors ended up investing in Axis Long-Term Equity Fund. However, in last 1 year, Axis Long-Term is the worst performing ELSS mutual fund. In last 1 year, it is ranked 55 out of 55, and since this return calculation is based on latest NAV, its 2-year rank is 54 and 3-year rank is 53. Now many retail investors are confused. Should they exit from Axis Long-Term Equity Fund or not? So let me clarify. Never invest only based on past returns. Because if you do that, and let's say in 2023, you invest in ELSS fund that has generated highest return in the past, then after a few years you will again face the same dilemma if your fund is not performing. And if you keep switching the fund by selling the underperforming fund and buying the top performer, eventually you will end up generating very low return. So what is the right way to identify the best ELSS mutual fund, not for just 2023, but for the next 10-20 years? Well, in general, if you search about how to shortlist the best mutual fund, you will come across parameters like you need to check factors like expense ratio, AUM, past return and volatility. And based on all the parameters, you need to select the right mutual fund. But trust me, it is not that easy. In spite of doing this exercise, unfortunately, there's no guarantee that you will shortlist the best ELSS mutual fund. Why? Because in the long term, no active fund can consistently remain among the top performing fund. We have already discussed this in our previous video on best mutual funds. It means there is high probability that the ELSS fund that you pick today might end up generating lower return in the future. Hence, if you want to avoid this hassle, as we discussed, the best option is Nifty 50 based index fund that simply replicate the Nifty 50 index. So won't it be great if you have an option of investing in index-based ELSS fund? Unfortunately, as of today, in ELSS category, we don't have index fund. all the funds are active funds. However, there's a good news for those who are looking for index fund in ELSS category. Recently, SEBI has allowed fund houses to launch passive funds, that is index fund in the ELSS category. And IIFL is the first fund house to launch a passive ELSS fund that would replicate Nifty 50 index. Now you might think that if IIFL has launched an ELSS based index fund, then all other fund houses will also start their index fund. Well, there is a catch. The catch is that as per current guidelines, a fund house can either launch active ELSS fund or passive ELSS fund. Now majority of fund houses in India already have an active ELSS fund. It means currently they can't launch a passive ELSS fund. But it would be interesting to see if SEBI will revise its guideline or not. Because if SEBI doesn't revise this guideline, there would be very limited options in passive ELSS category. Hopefully, SEBI will revise this guideline and there will be multiple options in passive ELSS category that would solve the problem of comparing returns and simply invest in passive fund for next 10-20 years. Now, as far as investment in IIFL passive ELSS fund is concerned, since this fund has just launched, I won't recommend jumping into this fund immediately. Yes, you can keep this fund in your tracker and watch its performance in terms of tracking error and overall return. But you don't need to invest immediately. Moreover, when it comes to investment in large cap category, it has been proven that it is difficult for active funds to beat the index. But in ELSS category, fund manager can also invest in mid caps and small cap fund. So ELSS is like a flexi cap category, and that helps fund managers to potentially generate that alpha, that is additional return over a large cap index like Nifty 50 by having some exposure in mid cap and small cap. Hence, for now it makes sense to invest in active mutual funds in ELSS category. So let us try to understand how to pick an active ELSS mutual fund. As discussed earlier, you should not shortlist an ELSS fund simply based on its past 1 to 3 years of return. Then how do you shortlist a ELSS fund? Well, of course, you need to look at past return along with expense ratio, AUM, etc. But most importantly, you need to understand the investment style of the fund manager. Please note that this is very important. So you need to understand whether the fund manager has growth-oriented approach or value-oriented approach or a mix of both. For example, if you look at Axis ELSS fund portfolio, it always focused towards growth stock. Its top stock in the portfolio has been Avenue Supermart and Bajaj Finance. Now both Avenue Supermart and Bajaj Finance have generated stellar returns in the past. For example, Avenue Supermart launched its IPO in 2017 at price band of 299. Guess what? By October 21, this stock touched a high of 5,300, generating 18 times return in just 4 years. Crazy, isn't it? Likewise, Bajaj Finance jumped multiple times during the same period. This in turn resulted in Axis ELSS generating extraordinary returns. Although both Avenue Supermart and Bajaj Finance have traded at premium valuation. So if you look at last 1 year return, while on one side Nifty is at its all-time high, Avenue Supermart is still down more than 20% and Bajaj Finance is down 15%. As a result, Axis ELSS fund became an underperformer. Now if you observe other stocks in the portfolio, it includes Info Edge among its top stock, which is again a high beta counter. So this suggests Axis ELSS fund has a growth-oriented approach where fund manager is willing to invest in growth stock even at premium valuation. This strategy has worked for them in the past, but it has not worked in last 1 year. Will it work in the future? That's a big question. On the contrary, you have investment style of HDFC fund house, which is more inclined towards value style. Now this approach didn't work for HDFC fund during 2018-19-20 period, but in last 1 year, HDFC funds are outperforming. So you need to decide which approach would you like for investment. If you think that Axis ELSS growth approach is good and it will eventually outperform, then you can continue investing in the fund. So understanding of fund manager style will give you a conviction to decide whether to invest or avoid a fund house for next 10-20 years. I know it is very difficult part because to understand the fund manager investment style, you need to have a good understanding of stock market, which majority of new investors don't have. You might also need to research on fund manager. Although the only catch here is that fund managers also changes. So if a fund manager changes, the investment style could also change. So yeah, it gets very complicated. But anyways, just hold on to this topic for now. I'll tell you my favorite mutual fund whose investment style I really like a lot. But before that, there is a second factor that you need to look at. You need to look at rolling returns. Try to understand this. If you look at past return, these returns are point-to-point return. It means if you look at last 1 year of return on say 7th of December 22, then it will show a return between 6th December 21 till 6th December 22. The next day, when you check, it will show return between 7 December 21 to 7 December 22. So that's point-to-point return, and it's not the right way to look at returns of mutual funds, because generally when we invest our money, we invest in form of SIP. Hence, the right approach to look at mutual fund return is rolling returns. Again, I don't want to get into rolling return as it gets very complicated and confusing. I have covered this in my course on everything about mutual fund. If you want to explore the course, I have provided the link in the description. For simplicity, here I would suggest looking at SIP calculator for each of the fund. On Money Control, you have the option to check if you have made an SIP of say X amount for Y period, what is the return you would fetch. For example, in case of Axis long-term equity, if you scroll down and click on calculate return and then click on SIP calculator, and let's say you invest 10,000 rupee 5 years ago in December 2017 and click on submit, it will show investment value, your profit loss and annualized return. This will help you get a better picture in terms of mutual fund performance. So if I summarize, you have to look at 4 parameters: AUM, expense ratio, rolling return and fund manager investment style, and finally decide which ELSS fund is best for you. With this, let me tell you my most preferred ELSS mutual fund. So my most preferred ELSS mutual fund is Mira Asset Tax Saver. If you look at key parameter, it has an expense ratio of 0.53% in direct category, which is reasonable. Its current AUM is around 13,500 crore, which is a good fund size. Now if you look at the returns, in last 5 years, an SIP of 10,000 in Mira Asset Tax Saver would have generated an annualized return of 20.28%, which is simply exceptional. In fact, I looked at its rolling return and Mira Asset Tax Saver has consistently beaten its benchmark in last 5 years. Finally, to have conviction in the mutual fund for long-term investment, even during difficult times, you need to look at its fund manager investment style. So Mira Asset Tax Saver currently has 58.67% exposure in large cap, 11.2% in mid cap and 7.16% in small cap. And its top portfolio, if you see, it includes likes of HDFC Bank, ICICI Bank, Reliance, Infosys, Axis Bank, and fund house has increased the holding in these stocks recently. In fact, out of top 10 stocks, this fund house has exposure in 4 banks and 3 IT stocks currently. And personally, I am also bullish on banking and IT stock. So that way, my investment style matches Mira Asset Tax Saver fund manager style. By the way, I have been tracking their portfolio for a long time and this fund is also a part of my portfolio. So I am investing in this fund for the next 10-20 years with conviction. So my first pick would be Mira Asset Tax Saver. Then second pick would be Canara Robeco Equity Tax Saver. Again, this fund checks all the parameters of low expense ratio, decent AUM, consistently high return and fund manager style. My final pick would be optional. If you like growth oriented style, you can continue investing in Axis. If you like value oriented style, you can pick HDFC Tax Saver. And if you want a mix of both, then I would suggest Kotak Tax Saver. I really like the investment style of Kotak Mutual Fund House and it also checks all my parameters. So in this video, we discussed 3 best ELSS mutual fund for next 10 to 20 years. If I summarize, my list include Mira Asset Tax Saver, Canara Robeco Tax Saver, and third, either of Axis or HDFC or Kotak Tax Saver. Although I would prefer Kotak as third option. As discussed before, SEBI has allowed passive funds in ELSS category and IFL has launched the first passive ELSS fund. So that would be very interesting space to watch out for. Now tell me, which is your preferred ELSS mutual fund? I hope you'll find this video useful. I'll see you next video. Till then, take care.